All right. Hopefully we've got the sound working again. Sorry about that. Does that sound a little bit better, Beth? Make sure y'all can hear me out there. All right. Can you hear me? Okay, good. Had a little glitch there this morning. Sorry about that on the audio. But I think we're up and running again. All right. So right now, our positions we have on right now, we have a buy going on the NQ, which is going to be the mini NASDAQ. I'm looking for a target of 114.45. And if we don't hit that, we'll reverse it 113.32 and a half. Get rid of that YM. And on silver, we're long, looking for a target of 21.71, reversal 21.26. All right, so that is going to get us going this morning along a mini NASDAQ, along the NQ, along the silver. Okay, I'm getting a 41 buy, 0541 buy on the Aussie US, 0145 buy. I'm sorry, 0141. 0141. Linden, no, it wasn't letting the dogs out. Okay. We are expecting to see a lower Dow today. If not, I'm definitely the indices. We are getting indication that the ES The US 500 is going to end up being a down day, meaning it's looking for it to close below its opening by the end of the day. And we do have that. We do have an overnight position coming in short on that for an overnight trade. All right, we're getting closer to target here on our mini NASDAQ. 114.45 is going to be that target. Okay, about 30 seconds to go here. We're going to get out of this Euro US here. Bought the 41 on the dip. Looking like we're at sitting at 46. I think we're going to be okay on this. Still long the silver and also long the mini NASDAQ. Okay, getting out of the Euro US. That was a win on the Euro US. So it makes us just open position. Still long silver. Still long the mini NASDAQ. Slowly getting closer to target on our mini NASDAQ. 114.45 is going to be our target. Okay, of course, out of the Aussie US. Nice little trade on that. Sorry, long out of the Euro US. Okay, still long the mini NASDAQ. Still long silver. Mornings recently have been pretty quiet. Haven't had a whole lot of setups with Einstein in the morning. It's but it will pick up here once the Dow opens up in about another little bit more than 10 minutes to go. So take a look real quick on our overnight trades. These are the trades that we put on the night before. So we put these on last night. Exiting today, we're coming in short the small cap. We are also, let's see here. Small cap is going to be your mini Russell. We are also coming in short an Aussie US, and coming in long a pound US, So basically, those trades we put on the night before, it's basically set and forget, put them on, let them go, and they will exit today at approximately 3 p.m. Eastern. Small cap's going to exit at 4:15 Eastern. So it's a nice little set and forget trade. You put them on, don't have to worry about them, just let them go. If that is your style of trading, I prefer to be more of a short-term trader. I think that gives you a lot more opportunity. But they're all good. Using the same patterns, so basically the same patterns that I use on my short-term trading, same pattern that I'm using for my overnight trades. So the nice thing about these patterns is that they are not only universal, meaning they work in any freely traded market, but I can use them on any time frame, which is really cool. So, okay, so we're just sitting here waiting. It's kind of quiet, but we are slowly creeping up here on this mini NASDAQ. I think we're going to hit target here. I like to hit it before the Dow opens up. Silver's just kind of doing its thing, just very, very quiet. Silver's going to be a very quiet. Probably going to take a while before that silver either hits our target or reverses. Nothing on the gold. Nothing on crude, nothing on natural gas. Bitcoin's already had a short this morning, so nothing on Bitcoin. Yes, absolutely. That's a very good question. Yes, I don't use the Nadex charts. In this case, we're using Nadex for our platform. Once again, you can use any platform you wish. I like to use Nadex because it gives me some advantages in trading and putting on my trades. But everything profit target hit. All the setups that I use are going to be based off of what I see on Thinkorswim. That's the platform I like to watch. So, yeah, because remember, Nadex is just reflecting what you're seeing, right, on your spot market. So I just use strictly a Thinkorswim. Nadex, I place the trades. Thinkorswim will give me the buy and sell entries. And no, the prices will be different. All right. So it doesn't matter what the price is. Just like I'm using a /ES. If you're trading a future contract, you may find that the price is different. It doesn't matter. It's just whenever I get triggered on an ES buy, you buy whatever that price is on the ES, and then whenever it reverses, you just reverse. So you're going to be using Thinkorswim as your entry and your exits. All right. And if your prices are different on your platform, the key is just to make sure that you're watching the spot market to see what that's doing. All right, so out of the mini NASDAQ did hit target. Still long to silver. Glenn, does that make a little bit more sense? Great question, though. Because even if you're using a different platform, you may be using TradeStation, right? Which is a great platform. Doesn't matter what platform you're using, NinjaTrader. You're going to see sometimes that the prices are not exactly the same as what you're seeing on other platforms like Thinkorswim, particularly Nadex, because Nadex uses what they call an indicative. It's the price is going to be a little bit different from what you actually see. But the key is just using the patterns, right? So if it's a buy over here on my Thinkorswim, then it's a buy, irregardless of whatever the price is on the other platform, right? Now that doesn't mean you have to use Thinkorswim, but whatever gives you spot prices, right? That's what you want to use. And then if you're trading off of Nadex, you just use those, whatever that is, for your entries and exits. Because once again, Nadex, because it is an indicative, it is going to be a little bit differently. The price is going to be different. They're usually like a pip off, I think, when we're looking at the currencies. All right. Interesting. Getting a buy on the ES now. Getting a buy on the ES. I gave you a target on that. Be careful on these buys because we're showing indication the market's going to be down today. But anyway, I'll give it to you anyway. ES is going to be, target is going to be 34.75. That is going to be our profit target where we'll get out and take our profits. And if it reverses, it's going to reverse at 36.97. 36.97. Which means if we don't hit our profit target, we're going to reverse and go short, and then we'll get a new target. So let's talk a little bit about, I know a lot of people think that, you want to use, tighter stops, right? But what we have found in our research, and this is 40 years of research, is that you have to give the market room to move, right? So your stop a lot of time is going to be bigger, larger than your target. Okay, but remember, when you have something that's giving you a 70% probability and higher, even at 70%, even if you take 70%, and you're still going to come out ahead, even if you're just doing single contracts, right? So if you do the math, so for simplicity, let's say you make $50 on the target, but you're risking 100. So if you take that, take 3, so that means you're going to be wrong 3 out of every 10 trades approximately. Remember, it never works out that way. I mean, you can have streaks, winning streaks and losing streaks. But remember, this is a long-term game and we're playing probabilities. So that would be, if you lost 3, that'd be 150, right? No, that would be 300. I'm sorry, that'd be 300. So, but if you, on the other hand, if you're going to be right 7 times, making 50, that's going to be 350. So the bottom line is you still come out net 50, right? Now, that doesn't sound like a lot of money, but once again, remember, we're adjusting size as we go, depending on the kind of setup. So you do come out ahead. So don't be afraid of using a bigger stop. You've got to give the market room to breathe. And I think that's where a lot of people get kind of messed up. So it's counterintuitive, but, being counterintuitive in trading makes you money. That's the problem with a lot of new traders, and even traders that have been around for a long time. They have this idea that, everything has to be like a 2-to-1 or 3-to-1, and it doesn't have to be that way. And that's where a lot of people get get hurt, is because they don't give themselves enough room to breathe, particularly if they're going for larger targets. So the farther out your target is, the more room you have to give it to breathe. So hopefully that explanation makes sense. And that has proven out, that has proven out real time. So you can have all the theories in the world. It's what really works in the market, right? So that's the key, is what is working in actual trading. All right, natural gas just got a buy here. I'm getting a little bit late on this because I was talking, but let's take a look at this natural gas. Natural gas being one of my favorites. I love natural gas. It's a good mover. Okay, natural gas. Looking for natural gas to come up to 67.45. 67.45. And we do have a reversal. If we don't hit that, we're going to reverse at 65.95. All right, pretty much coming along on everything. Silver, natural gas, and the E-mini S&P, which is which is going to be your ES/ES. Getting a buy now on mini Dow. Also, mini Dow is getting a buy here, which is going to be your YM. That's going to bring you up to a target of 301.80. I'm sorry, let's see here. That's going to bring you up to 302.63. 302.63. Be careful here because the Dow is opening up. Dow's down 345. So if that, let's see here, if the mini Dow doesn't hit target, it's going to reverse down here at 338. 338. That would basically be the stop and reverse to go short. So we're long the S&P 500, we're long the mini Dow, long silver, long natural gas. Yeah, MetaTrader 4, that's a great platform. And you're going to notice, even on that, even when you're looking at spot prices, sometimes they're different, right? They're going to be a little different, which is interesting, but it doesn't matter. When it comes to the patterns, use the platform that you have. But it's whatever your platform is showing, it's not going to match with what Nadex shows, because Nadex is using an indicative price. But I think MetaTrader 4 profit target hit. It's either that one or another platform is really close to the indicative price. Okay, so ES just hit target, so exit the E-mini S&P. Profit target hit. Target hit on the mini Dow. Exit on the mini Dow. RTY just went long, which is your mini Russell. That is my favorite. Give you a target on that. Target on RTY, it's coming fast. 1684, 1684. That is going to be my profit target on the mini Russell. It's getting so close to target, I won't put in the reversal yet.
Profit target hit.
Okay, we just hit target on the mini Russell, which is RTY. Good action this morning. I like this. Once again, when you're trading these indices, you know, the E-mini S&P, Russell, Dow, or the mini NASDAQ, I highly suggest, particularly to my students, I never suggest trading more than one. My personal favorite is going to be the RTY, which is the mini Russell, and then second probably the mini S&P. I do like NQ, so really in that order, RTY, ES, NQ, and then the mini Dow. It's kind of my order of favorites. On the commodities, I love gold and I love natural gas. Natural gas is getting closer to target. So once again, keep in mind, if you're watching us on YouTube and Facebook, this is for demonstrational purposes only. There is no way that you can follow 16 different markets and make every single trade, all right? So that's not the idea. The idea is to show that these patterns are universal and that I'm calling them out in different markets so you can get an idea that these patterns, whether you're trading a mini S&P or you're trading a gold, or maybe you're a commodity trader and you like to trade cattle and pork bellies, or you're trading, you know, you're a forex trader and you like to trade the currency pairs. These patterns are universal. They work across the board. And that's the idea of the demonstration. Not that we're sitting here and we're taking every single one of these trades. Personally, what I like to trade, I like to trade the RTY, I like to trade gold, I like to trade natural gas. Beyond that, it's really hard. And of course, the US yen. But beyond that, it's difficult to trade more than that, particularly if they're all hitting at the same time. So you have to pick and choose which one you want to make priority for yourself. But I get into a lot more of that, you know, in our live room when we're actually looking at trades. I'm pretty selective in what I do trade. Of course, that's all part of the training, right? So, and always keep in mind that trading is more than just having a good tool, right? I mean, having a good tool that you can count on, and that what I say is universal, is going to be the strongest tool that you have. You can never say that for any one indicator, okay? So I challenge anybody to take an indicator and have it work in the ES and watch it and see, and then move it over and see if it'll work in a crude oil or a pork belly or whatever. And they never do. They never do. But the nice thing about patterns is that if you're looking for the right pattern, right, and you can identify these behavioral patterns, and there are a lot of them out there, and you find that they're universal, that's a much more reliable tool to use in your trading, because then you can feel confident of your tool. And that's number one. Got to feel confident in the tool that you're using. But then you have to become skilled at using that tool, right? So just like a carpenter, I can give you the most expensive tools in the world, but if you're not a carpenter, you're not going to go out and build a house with it. But you put it in the skilled hands of a carpenter, he's going to be able to do all kinds of things and build out that house, right? So that's the way trading is, and anybody tells you different is not being honest. It's never as easy as just following a set of rules and making money. You can't make this a black and white business. A lot of people don't like to hear that, so they trade their robots and they listen to all these guys promise them millions of dollars if they just follow their particular method, right? Well, is their method based on something that's solid? Okay, is it based on something that can be relied upon? Is it universal, which is even more important? More important, is it universal? Okay, is whatever their method is, can I use it on anything without having to change parameters? Right? You don't want to have that. You don't have to change parameters. See, patterns don't have parameters. Indicators have parameters. So when I say parameter, I mean, like, let's say something as simple as a moving average, right? You've got a 21-day moving average, you got a 20-day moving average, you got a 22-day moving average. You know, what's so funny is you can take a 21-day moving average and put it on something and say, wow, that was great. You know, the last 10 years it made a lot of money. Change it to 22 and all of a sudden it loses money, right? Or change it to 19 and all of a sudden it loses money. Yeah, I mean, common sense tells you it's probably not something you want to rely upon, right? Then you take that same 21-day moving average that worked great on the S&P 500, and then you put it over and you put it on crude oil, and it loses money, and you put it on natural gas and it loses money. Well, is that something you really want to trade with? Not for me. So it took me a long time to find. I mean, in the beginning of my trading career, back in the early 80s, I realized that if I'm going to find something, it's got to work across the board. Okay, I can't be. Everybody was out looking at curve fitting, taking all these indicators, and so we did a lot of study on indicators. We did a lot of research, and nothing would ever hold up. Nothing was ever universal. So we were always, the key for us, the holy grail for us, was to find first of all, something that didn't have a modifiable parameter, right? Like a moving average or a Bollinger Band or whatever, and that was universal. So it was a big job to find that, right? Something that doesn't have a parameter and that's universal. But we figured if we ever found it, then that we would be as close as we possibly could be to having what they quote call the Holy Grail, which doesn't exist, obviously, right? Nothing's 100%. Life's not 100%, and trading is definitely not 100%. So, and we did find it with these behavioral patterns. And so then you also have to have realistic expectations. You have to understand the market. And you also have to keep in mind that, you know, between 25 and 30%, there's going to be noise in the market. I would say maybe not that. I'd say probably 15 to 20% of the market is going to be noise, right? So, or 25 to 20%. So, I mean, anywhere in that area, there's going to be noise in the market. You cannot predict noise. So the maximum you can expect for in terms of reliability over a long, long period of time is somewhere between 70 75%. All right. Yeah, you're going to have days where you're going to hit 100%. I've had those days. Then you have days where you're not going to hit no 100%, right? But you've got to look at trading as a long term, right? This is long term. We're not in here to trade for a week and then retire. We're here for years and years and years. I've been doing this now for 40 years. So this is a long-term career, and you have to look at it that way. So you don't get, you know, if you get into a situation where you're having a bad day, walk away. There's a lot of days left, all right? There's a lot of days, and you have to look at it that way. You have to train your mind to take a longer-term perspective on your trading and say, you know what, I've got all the time that I need. If I'm having a bad day or for some reason I'm just not in sync with the market or whatever, you know, walk away, shut the thing down, go, relax your mind a little bit, come back. You will be surprised. The market overall tends to flow very nicely, right? I mean, you've got a 70% and higher probability that you're going to be trading in a nice, smooth moving market. But then again, you're going to get caught in those 30%. And so the key is with time and experience and put in that screen time, you're going to know, is the market acting normal today or is it not acting normal today? And you will get a feel for that. And the only way you can get a feel for that is by putting in screen time. So when you see that the market's not acting normal, I mean, I know what a normal ES looks like, or the mini S&P. Also know what a normal Euro US looks like. And so when the Euro US or the mini S&P is not acting, quote, what I consider normal, right? It's not having normal price action, then you just step aside until it snaps back in. And the other nice thing about that is, once again, it's going to be in, right? It's going to be acting normal more often, at least 70, 75% of the time, than it is when it's not acting normal. So once again, that's the other key of trading. You can't just come in and expect that you're going to trade profit target hit. you're always going to be hitting a smoothly moving market, okay? You've got, and an indicator won't always tell you that, okay? Or even a pattern. Sometimes you're going to see a pattern that is setting up, but then you have to look at the market and say, man, is the ES actually normal today? And if it is, then I definitely want to trade those patterns. And that's something that we teach in our class. So what did we just hit something here? Looks like natural gas just hit its target. God, I love natural gas. That's why it's one of my favorites. It's very reliable. All right, get out of that natural gas. So right now, the only thing we have now is long as silver. So take a look at Dow's down 272. Gold is getting a buy. We're getting the HF2 buy in the gold. Gold's one of my favorites, so I like this gold. Let me give you a target on that gold. Okay, gold target is going to be 1849, 1849. That is going to be my profit target. If for some reason I don't hit 1849 and I need the reverse, I'm reversing at 1840. And I'm going to take a short position, meaning I want the market to come down.
Reverse sell.
Okay, let me try to put that in one more time. So long gold, trying to reverse at 1840. Ignore that alert, that was my error. 1840, let's see if this sticks. Trying to draw these lines on here so you guys can see the lines on charts. There we go, much better. Okay, still long silver, now we're long gold. Crude oil is getting a buy, crude oil is now getting a buy as well, so let's get a target on crude. Target on crude is going to bring us up to 103.15. 103.15. Also, keep in mind, if you're on YouTube and Facebook, don't attempt to make these trades. There is a delay, first of all, in the broadcast. And number two, I'm trying to follow, 16 different markets. I may get in. I'm like this crude came in late. It bought it at. The trigger on that was 102.65. I'm trying to hit 103.15. So, you really have to understand the strategy. And if you're like trading crude, you got to be on top of it. So when it hits, you want to enter. Otherwise, you're going to be getting in late. Particularly if you're on YouTube or Facebook, you may be buying in late. You don't want to do that. Okay, if crude doesn't hit the 103.15, reversal is going to be 101.65. For some reason, it doesn't want to take my alert, so I'll draw a little line down there for you. 101.65 would be the reversal if we don't hit the 103.15 first. So the key about trading with patterns is once you trade patterns, you never go back to indicators. You just won't go back to indicators because they're just not reliable, right? I mean, the analogy I always use is you see a lot of these traders, particularly the inexperienced traders or people that market on the internet or YouTube or whatever. You see their charts and they got all these indicators, right? They got their MAC down there, and they got their Bollinger Bands, and they got their moving averages, and they got all this crazy stuff, right? So, ask yourself a lot. Well, a couple things. Number one, if 98% of the people lose money out there, well, 98% of the people that are losing money are usually going to be a retail trader, and they're all using indicators, right? So that within itself says you probably don't want to be using indicators if everybody's losing money and they're all using indicators. But the other thing is that when you have an indicator, and people like to stack indicators, right? So you never see anybody just have one moving average. They always have three, or they always have, a moving average on there. And then you also see, well, you have the Bollinger Band, you have all this other stuff on there. Well, if anything is good and reliable, right, then whatever that moving average is should be profitable on its own, right? It should be profitable on its own. So to me, it's like having an engine that's running really smooth, right? And then all of a sudden you lose the spark plug, right? Which is kind of like an indicator, right? Indicator's not working by itself. So what do? In the end, you go ahead and you throw in another dead spark plug into your engine, thinking it's going to make the car run smoother. So it's the same with indicators. If an indicator by itself doesn't work, why would you want to stack them on top of each other? You're just stacking stuff on top of each other that doesn't work. So to me, it never really makes. I mean, when you really sit down and trust me, I wasn't thinking like this 40 years ago. I mean, to me, it's like out of the gate, I was looking at everything and I was thinking, well, maybe indicators work because everybody's using them. But when you start researching it and you start to think about the markets logically, okay, then you realize that what you're doing just doesn't make sense. I mean, markets don't work like that. And you have to understand how markets work and how they function. And, everything is a globe. You have to look at everything globally. You can't be, looking at just one single market and think that you have all the information. You don't. There's more information out there that is related. Either it's going to be a positive or negative correlation to whatever you're trading. You've got to take all of this into account when you're trading. All right. If you want to be a long-term successful trader, if you want to make a career out of this, that's the way you got to do it. All right. If you're one that just wants to buy something and think that it's going to give you buy and sells for the rest of your life, you're going to end up just doing nothing but losing money. All right. So you're better off just putting your money with a professional manager that can manage your money. Put it in a mutual fund or something. But don't try to trade thinking that you're going to buy something that just push a button, you make $1 million. I mean, if that was the case, all these big firms out there, that's what they would be doing. But look at how much they pay these traders to trade these huge funds. I mean, these guys are making millions a year. You think they'd spend millions a year on a trader if they could program it in and make it simple? And I promise you, they have a lot more resources than you do. They can throw a lot more money behind research than you do. But they still rely on a human to make those decisions. So anyway, hopefully that will give you guys some really strong, good information, right? It will open your eyes up to what really is out there. Stop looking at junk. I mean, and I call it junk because I don't know if anybody makes money trading indicators. Your successful traders, particularly your day traders, your short-term traders, they're using price action, right? Using price action. This is price action, but it's based off of patterns. That's what it is. It's behavioral patterns, behavior that is identified in the price. That's what it is. So anyway, we still have about 9 minutes to go, and we are still long the gold. We are still long the silver. Looks like crude oil is still in a long position. Pretty quiet right now. Let's see what the Dow's doing. Dow's up. Dow's down. Still down 295. Once again, when we did our scan on all of our stocks, we had a lot of them pointing down today. So we are anticipating the market to be lower today. Particularly on the US 500. So I'm going to tend to be a little bit more short biased anyway. Yeah, 3 Bollinger Bands. Well, something's going to see it. It's just, and eventually it's going to hit a band and they're going to say, wow, look at that thing. It really worked. Or a Fibonacci number, right? hit my 62% or whatever. Oh my God, this thing is awesome. You can blindly, what's interesting, you can blindly go in there and draw a line, and I promise you, you can go, close your eyes, draw a horizontal line on the chart, and I promise you prices will eventually come and hit that in reverse. Okay, it's just the way it works. And the more lines you put, the more chances are it's going to hit. All right. Funny stuff. And I really don't think people are being so much deceptive. I just think that these people believe that because they see other people using indicators and they say they're making all this money, they think that's the way to make a lot of money. All right. So everybody, it's just like, it's just sheep mentality, right? Everybody's doing it, then, it must be a good thing. Well, in reality, if everybody's doing it, you need to be doing the opposite, right? So if the majority of people lose money, it only makes sense you would be wanting to be a contrarian. You want to be the opposite. It's just like when everybody in the world is saying the market's going to crash, it's going to die, it's going to do this, it's going to do that. You want to start looking to buy when everybody's frenzying, everybody's buying something. You want to sell, right? So you want to take the yeah, they're going to make money over a little bit of period of time. Sure, they're going to buy in, they're going to make money, and they're going to say, "Wow, this is great." But one day, everything's going to collapse on them, and they're going to lose it all because they're going to think, "I just hold on to it," right? It's that buy and hold mentality, but they follow the crowd because they heard it on TV that such and such is buying a particular stock, or because everybody's talking about gold is going to do this or gold's going to do that. So they listen to all that. And I think it's good to listen to all of that. That's okay. Just be able to trade opposite of what you're hearing. And a lot of people can't do that. They can't go against that. It doesn't feel comfortable. But those are always going to be your best trades. It's just like when you start off as a trader, if a trade does not look good to you, it's probably the trade you need to make. If it looks good to you, then it probably looks good to everybody else that's not an experienced trader, and you're probably going to end up losing money. So this is a funny game, right? It's an easy game, but it can really mess with your head. All right, still long gold, still long silver. Looks like we're green on gold green on silver. Crude is still in a buy, going green. All right, gold just hit target, so out of gold. I love gold. Gold is so good. Crude, silver still long. Crude's getting ready to slowly working its way up the target. You're right, Jerry. Stick to it. You're absolutely right, Jerry. Are you a core trader? Have you traded with the core strategy? I don't know if I've asked you this before, but that name sounds familiar. Yeah, it's been a really good morning. Awesome morning. Had an awesome night last night. Last night was absolutely awesome. So still target on that crude oil, and don't know why that alert went away, but crude does some weird things with my alerts. 103.15 is still that target on that crude. 103.15. I'll just have to draw a line in here because it does some weird things on crude oil, and I just don't know why. We'll make that green. Okay, there you go. 103.15 is our target on the crude, working its way up. Crude approaching target. Wow, haven't had any reversals this morning, which is awesome. Okay, well, you know what? It's already top of the hour here, so we're going to go ahead and we're going to end the free live broadcast here. So, if you're interested in learning more about my strategies, probably the best place to go is my YouTube channel. Plenty of educational material out there. And you can learn a little bit more about Einstein, and you can learn a little bit more about my core strategy. And you can also, if you'd like to get a hold of me, just go to my website, binaryprostrategies.com, and be glad to answer your questions. I do answer them personally, so feel free to ask me your questions. And besides that, I want to wish everybody a great trading day and look forward to seeing everybody first thing in the morning again for the live show. Y'all take care.